Canadian dollar. And we've seen it drop, as I mentioned earlier in the show, top of the show. Canadian dollar has been steadily dropping from in and around 75 cents, which seems to be, in my opinion, on average where it is. Some might say a little bit lower if you take an average over the many years. But we were sitting around 74, 75 cents for a little while there, and now definitely taking a turn for the worse. We have a chart of the Canadian dollar that's actually a little outdated. It's actually below 72 cents now. I know it was slightly higher this morning when I came on air, but still below 72 cents. And why is this so important to me? Well, for obvious reasons, those that are looking to travel to the US, which is where many travel to, obviously a lot more expensive now to travel. But from an economic standpoint, what can it do and what does it do? Well, first of all, those that are bringing in goods to the country, bringing in, whether it's steel, whether it's aluminum, base metals, product in general from the United States, things become a lot more expensive. You're taking our dollars, cannot buy as much out of US dollars and product from the US. So things become a lot more expensive. And what does that mean for these individual businesses that take these products to make something? Well, that just means that what they're making will cost more. Inflation. If our dollar falls too much and what we're importing costs rise significantly, that could spur on more inflation, something that we've been trying to avoid by raising interest rates and now cutting rates to stimulate. A low dollar could bring back some inflation into our economy. When you look at that's on the import side. Our exporters would be doing fantastic. Why? Obviously, when you're exporting to the United States, which is our largest trading partner, the United States can buy more of what we have to offer because their dollar will buy a lot more over here on our side of the border. So if you're an exporting business, a low dollar is great. If you're someone that imports goods or anything for that matter, product in general, that is unfortunately makes things a lot more difficult. So inflation could be affected by a weaker dollar. And obviously on the investment side, for those of us that take our Canadian dollars and go down and buy US, that too, it makes it a lot more difficult. For those that have US investments, obviously those do a lot better. So Canadian dollar makes a big difference. And why is our dollar falling as much as it has? Simply because we're just cutting rates faster here in our country than the US is. For a little while there, we were cutting rates, Bank of Canada was cutting rates, and it was thought that the US would follow. They cut 50 basis points, but now the talk is at their next two meetings, will they cut once or not at all? Versus will they cut 25 basis points or 50 basis points? A different mindset altogether. And that is because their economy is faring a lot better than ours. Perhaps it's because of artificial intelligence. We've seen how artificial intelligence is skewing things, is changing the way we live, turning things upside down, making a lot of things better, faster, more efficient. Well, that's what it's doing to the US economy. It's doing that to the Canadian economy as well, but we don't have as much tech here in our economy. We're more based on commodities, oil, base metals, precious metals, things of that nature. So our stock market, for example, has not fared as well in the last few years as the US has. And a lot of that has been because of the tech. Although this year, we've been doing quite well since the summer because US dollar was thought to have been coming down with interest rate cuts, and that helped our commodities and the TSX. But back to our dollar itself, it's falling because now the talk is the Canadian interest rates will fall faster than the US, and that could be at some point a point of contention for the Bank of Canada. They're going to have to take a look at this at some point because they don't want to see such a large discrepancy in currency. They don't want to see such a large discrepancy in the overall federal rate, the bank rate, and what that's doing versus the Fed funds rate. So something for Tiff Macklin, I'm sure that he's keeping an eye on, and the Bank of Canada is keeping an eye on, and we will all keep an eye on what our dollar is doing relative to the US dollar in the coming months.